Hey, welcome back to The Dive. Our guest today is one of the most famous and successful entrepreneurs in the mining industry. He will deep dive into US President Joe Biden's job approval ratings, copper, his thoughts on the strategy of holding mined gold, gold's price action, as well as the company's Q4 financial results, estimated production for 2022, and what investors should look out for over the near term. He is the chairman and chief owner of McEwen Mining. Rob McEwen is joining us today. But before we bring you Rob's interview, do me one quick favor and just go ahead and hit that subscribe button for me, please. Hey Rob, welcome to The Dive.
Thank you very much, Cassandra. Great to be here.
Yeah, thank you so much for joining us today. Okay, so let's dive right into it here. US President Joe Biden's approval ratings have lowered in his second year, with just 40% of Americans approving, which according to data from 538 is a lower approval rating at this stage than every president outside of Donald Trump. Many argue that the United States is headed in the wrong direction. How big of a problem do you think inflation is for Joe Biden?
I think it's going to be a huge problem for him. He's going to be facing a toxic mix of rampant monetary expansion, heavy debt loads, massive supply disruptions caused by COVID, and then the Russian and Ukrainian conflict. And all this is going to has produced rapidly increasing prices of goods and services. And that's not going to make him very popular.
Okay, so let's shift to copper here. Copper prices experienced huge fluctuations last week. Given the macro backdrop, what is your read on where the price of copper is heading?
The push away from fossil fuels has focused investors' attention on the need for copper due to its critical role in electrifying transportation and regenerative technologies. And copper has been called the new oil. So projected demand looks like it will exceed annual production by a significant margin going out into 2030s. And that should drive the price of copper higher. It just takes quite a bit of time to expand production and bring new mines on. So I'm quite a positive outlook on copper.
So last week, the U.S. Treasury issued a notice that President Joe Biden signed executive orders prohibiting all gold transactions with Russia. Some say that this is in response to Russia asking the unfriendly countries to buy their oil and gas in rubles. Do you think that this has an impact on gold's price?
Well, I don't know how much gold Americans buy from Russia, and I don't know if the Russians are selling their gold to get around the sanctions. But I do know that you can sell gold anywhere in the world, and you can also borrow against the gold without having to sell it. So I expect the impact would be minimal.
So what do you think needs to happen for gold to leg up higher from here?
Yeah, time. It's the stage is set. We've had massive monetary expansion. We have low interest rates that have encouraged a lot of speculation. And we're seeing the price of commodities starting to move, and they tend to be late market movers. And gold falls into that category. So I expect that we're going to see gold moving higher throughout the year.
Okay, great. That's what we'd like to hear over here. Okay, so let's move on and talk about McEwen Mining. The company recently gave an update on production and cost guidance for 2022, with estimated production up to 172,000 gold equivalent ounces. How challenging is it to achieve these results, and what does this mean for the company?
Okay, well, the 172,000, you picked the high end of the range that we put out. So we have to operate pretty well during the period, and the gold price has to stick around these prices. But to make that, we've had a bit of a hiccup at the beginning of the year with COVID interruptions and some equipment failures, some weather. I'll call those unacceptable excuses, but we've had those. I would modify that range. I think we'd probably be in the 160, 65 range rather than the 172, based on what I've seen already this year. But you just need everything working properly to get there.
The company also recently announced the closing of a private placement offering for gross proceeds of 15 million US dollars. The company has around 54 million on the balance sheet as of the last filings. Can you give us some color on the decision behind the financing, and what is the plan for the capital?
Sure. Yeah, it would definitely appear that our treasury was large enough so that we didn't and that the financing was unnecessary. Now, it's important to understand that much of the dollars shown in our treasury belong to our subsidiary, McEwen Copper. We consolidate the funds held by McEwen Copper. The $15 million was in financing that's tax-driven in Canada, and it's specifically for funds to be used for exploration. And we're using that at our Timmins property to attack some of the targets we see there that would, if successful, would allow us to shorten the payback period on our Timmins expansion plans. So that's why we raised the money, to put it there. And the funds were raised at a premium to market because they're tax driven.
Okay, so some have argued that gold companies should start holding onto mined gold in an attempt to put pressure on the price at metals exchanges. Do you think that this strategy would have a material impact on prices?
If the whole industry embraced it, I think it would, but I don't think the whole industry will embrace it. Back in the early 2000s, when I was running Gold Corp, we started withholding gold from production. And initially 10% of our production, and we increased it to 30% of our production. And when I left Gold Corp in 2005, we had accumulated 200,000 ounces of gold, and it was stored in a vault rather than selling it.
Okay.
And the thought was, well, we had very high operating margins. So, and income taxes were our largest expense. And I decided, well, because of our margins and we didn't have any debt at the time, we didn't need to sell the gold. I felt gold was going higher, and it coincided with lowering of the tax rates going forward. So, but we held back a lot of gold, and you could borrow against it and increase your financial assets by the reciprocal of the tax rate by which you withheld. Now, after we did that, there were a couple of companies I observed started doing that, but they didn't continue. And I think for the whole industry to do it, you'd have to have very high operating margins. The whole industry, every company in the industry would have to have high operating margins and not plans to use their capital. And I just don't see that happening, although it'd be a good idea. But I don't think everybody I know everybody doesn't have the same level of margins.
So lastly, Rob, what should investors be looking out for with McEwen Mining over the near term?
This year is the second year of a turnaround at McEwen Mining. So our operations, although in the first quarter will be a little shaky at Timmins, but Gold Bar is moving ahead. Our Argentinian operations are moving. But the really big story, I think, is McEwen Copper. And it contains 100% of the Los Azules copper project, which is, it's been measured as by Mining Intelligence magazine, the 9th largest undeveloped copper deposit in the world. And
wow.
So we're looking at it. There's a private funding that's going on, where I put up $40 million personally, put it in the treasury last year. and we're looking to complete it this quarter, and there'll be another 40 coming in. But that's to move us from a preliminary economic assessment stage of development to a pre-feasibility stage of development. And at the preliminary economic assessment stage, it's valued at 175 million, or 0.6 cents per copper equivalent pound. We have 29.5 billion pounds of copper in resources, indicated and inferred, and in gold, 5.5 million ounces and 191 million ounces of silver in this deposit. So it's big. And advancing it from a preliminary economic assessment to a pre-feasibility will be advancing the value of the property from 0.6 to 3 to 5 cents per pound. And that would mean the aggregate value of the property would increase from 175 million to just under $1 billion to $1.6 billion. And I see that as the largest value creator for McEwen Mining.
Yeah, definitely a lot of room to grow there. Well, thank you so much for joining us today, Rob, and sharing your story with us. It's been so nice to meet you.
Thank you, Cassandra.
Thanks so much for watching today. We'll be back again tomorrow with the latest news and updates. So be sure to follow along by hitting that notification bell and subscribing below.